Hey everyone, welcome back to Corporate Decoder. Today, Acquisition Corp. I just filed an 8K report and I am seeing a major shift in their acquisition strategy that could reshape their entire company. Quick note, this is not financial advice, just my take on public filings for educational purposes. This filing reveals they are looking to acquire a company called American Industrial Technologies, and this could be a very interesting move for this special purpose acquisition company. So what is going on with Acquisition Corp? This company, often called a SPAC, is basically a company set up with the sole purpose of finding and buying another company. Acquisition Corp. Itself is listed on the NASDAQ under the ticker SIMA and its warrants trade as SIMAU. They have these units which are made up of a share of their stock and half of a warrant, and these trade under SIMAU. Then you have their regular Class A ordinary shares, which you can buy with the ticker SIMA, and finally the warrants SIMAU, which give you the right to buy shares at a certain price in the future. It is a common structure for SPACs. Now the big news here is from the 26th of April 2026. This is when Acquisition Corp. Which will call the company, entered into a non-binding letter of intent, or LOI, to acquire American Industrial Technologies, or AT for short. This means they have an agreement in principle to buy 100% of AT. What exactly is AT? Well, they are described as a leader in telecommunications with a 33-year track record. They have grown into a company that does everything from manufacturing to logistics, distribution, and even connected device ecosystems. They've built strong relationships with major telecom companies, also called Tier 1 and Tier 2 carriers, and have developed a solid infrastructure for third-party and fourth-party logistics, as well as e-commerce. This infrastructure allows them to distribute products globally, covering the United States, Europe, and Latin America. This LOI is just the first step. Both sides intend to negotiate what are called definitive documents. These will be the formal, binding agreements that lay out all the details of the acquisition. Think of the LOI as a handshake agreement and the definitive documents as the full contract. One important part of this LOI is an exclusivity period. For the first 45 days starting from when the LOI was signed, both Acquisition Corp, and AT have agreed not to talk to or make deals with any other potential buyers. This gives them dedicated time to work towards finalizing this deal. If they are still talking in good faith after those 45 days, this exclusivity period can automatically extend for another 15 days. It is crucial to understand that most of this LOI is not binding. This means they can still walk away from the deal. The only parts that are binding are things like how they will keep information confidential, who pays for what expenses, this exclusivity agreement, and how the deal would be terminated, along with details about which laws apply and how any disputes would be handled. But the core of the deal, the actual purchase of AT, is only confirmed once those definitive documents are signed. This news was so significant that the company released a press announcement about signing the LOI on the 28th of April 2026, just a couple of days after the LOI itself was signed. This press release is included as an exhibit with this filing, which means it is officially part of the record. It is good to remember what Acquisition Corp. stock is currently made of. They have units which include one Class A ordinary share and half a redeemable warrant, and these trade on the NASDAQ. They also have individual Class A ordinary shares also on the NASDAQ and the redeemable warrants, which can be exercised to buy a Class A ordinary share at a price of $11.5. The company has also checked a box indicating that it is an emerging growth company. This means they are a smaller company with a relatively recent IPO, and they can take advantage of certain regulatory flexibilities, like not having to follow the same strict accounting rules as larger, more established companies. This move to acquire AT is a big step for Acquisition Corp. As a SPAC, their main goal is to find a viable business to merge with and take public. AT seems to fit the bill by offering a substantial business with a long history in a growing sector like telecommunications and logistics. The devil, as always, will be in the details of those definitive agreements. If they can successfully navigate those negotiations and the deal goes through, it could transform Acquisition Corp. From a shell company into a significant player in advanced telecommunications logistics. The risk here is that SPAC mergers don't always work out, and the market reception to AT will be key. We've seen many SPACs struggle after merging, with their stock prices declining significantly. For example, many blank check companies after merging have seen their valuations fall 70 to 90% in the year following the deal. Whether AT can be the one to buck that trend remains to be seen. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded, like, comment, subscribe, and join our Discord in the description.